Good evening, ladies and gentlemen. John Kelly for Options University on Sunday, October 2nd, 2011. Disclaimer, don't trade unless you're going to use stop losses. You will experience losses. I have experienced losses in the past. I anticipate and expect to have losses in the future, but I'll be responsible and use stop losses and take them off whenever those are hit. Looking at the situation around the world, news this weekend from Greece, the finance minister there said we will miss our deficit targets for 2011 and 2012 because of deeper than expected recession. There was no response so far from the Troika, from the Economic Union and the IMF that are in Greece to assess the situation. Meanwhile, students in Greece decided that they didn't like any of that. Including the increased tuition for university, and set off on a series of protests and occupied a lot of the school buildings around the country in protest. And around our country, the Economic Cycle Research Institute came out with a statement over the weekend, said that the U.S. is tipping into a recession and there's nothing that the policymakers can do to head it off. Also on Friday we got a good corn report, record bumper crop. Well, if you were betting corn prices would drop and you were short corn, you were in good shape. You made a lot of money. And that affected the ag chemical stocks, AGU, CF, Monsanto, Mosaic, and Potash. They were all down as a result also. But this was Friday, last Friday, the end of the third quarter. It is the fifth month in a row that we have been down on the Dow, the S&P. There have been 15 occurrences now of having streaks of 5 months down in a row. Here are the previous 15. Longest one being in December of 1941. Will we go a sixth month? Well, the fourth quarter generally is the most bullish of all the quarters. The third quarter is the most bearish. So 4 out of the last 5 years on average, the fourth quarter has finished to the upside. There are a lot of factors that will weigh in on whether this indeed does happen because things have looked so dismal. But the end of September ends the 6 worst months for the Dow and the S&P and the 4 worst months for the NASDAQ. 6 out of the last 8 years, October, the first trading day of October, has been an up day on the NASDAQ. So let's see how this goes and see if we are going to reverse. Monday of expiration week for October has been up 25 of the last 30 years. However, the Friday of expiration week has been down 6 out of the last 7. And the higher probability of making money has been, by the end of October, a good time to go long in stocks that are down by that time. What stocks do well in the fourth quarter? Well, here's a list of fourth quarter stocks that have been positive in each of the last fourth quarter years. And here's another list of those have been positive in 4 of the last 4 quarters. So take a look at that list, spend some time with it, and put those in a watch list. Now, what has the S&P been doing? Well, I've tagged some lines here of points where we made an attempt at another high and we failed. It came down. We made another attempt at a high and we failed lower. We made another attempt at a high and we fell lower. So we have been making lower highs. At the same time, we have a small wedging action going here in the last couple of weeks. So how will this resolve itself? If we look at the volume bars, this was a distribution day sell-off. These were lower volume days. The indication might be that indeed this was end of the third quarter window dressing by the mutual funds, and we reverse and head upward from here. But just keep in mind that we have had 2 lower highs, 3 lower highs here in the last couple of weeks. Monday, we're looking at ISM Manufacturing Index at 10 a.m. and in construction spending, and we're starting a new earnings season, but there's very little on the agenda. We get something on Tuesday, Yum Brands, after the close. At 10 a.m. we have factory orders for August. On Wednesday, the activity starts to pick up on the jobs front. 8:15 ADP, private payroll. 10 a.m. ISM Services Index, crude inventories again at 10:30. And then we have some earnings that start to come up here. Costco before the open, Monsanto before the open. Remember last week, Mosaic missed, and their guidance on the pricing and sellability of potash in the next quarter was going to be lower. So we'll see how Monsanto comes in and reads before this. They've also had some problems. Some of their genetically designed seeds have not been working out as anticipated. Marriott Corporation after the close on Wednesday, and Ruby Tuesday as well after the close. Thursday, weekly jobless claims, 420 is the average we're looking for. And on Friday, the big number, non-farm payroll at 8:30, wholesale inventories later in the day. The sectors, still looking at leisure retail bullish. It's still above the 45 break-even level, so it is very slightly bullish. The 50-day put buy to open put call ratio is still flat, indicating the hedge funds are not in the accumulation mode. Stocks in that sector that are still performing okay: Amazon to a lesser extent, Chipotle, Green Mountain Coffee, Ralph Lauren, and Lululemon, although they are cracking. The large cap tech sector, and let's take a look here at the XRT just so you can see. I have drawn in here the channel that it has been in, and you remember from Friday's video, the channel that the S&P and the VIX have been, and also we're about in the middle of that channel. The volume has been tapering off. However, this was a bearish action on Friday with the bottoming indicator right here and the selling tail on top. The large cap tech still bearish. The Qs are still the strongest of the sectors. Remember, we have ended typically the worst 4 months of the Nasdaq and the Qs, and the stronger probability now is that they will reverse. The action here last week, once again in this channel, was not good, but we still are in the channel, so we're still chopping sideways for some hope of resolution. The financials still bearish. We have the FHFA lawsuit to work its way out, a new lawsuit against JP Morgan end of the last week, and the question still on whether there will be a Greek default. Haven't added anything to the base recount list, but I will keep that up there and add as I get more. Trade ideas that we'll look at in the gold member section, still the discount store sector. If the economy is going to stay down, that sector is going to do well. Auto repair sector, they're down somewhat, but the volume's down. It's not a sell-off by the funds. And then I have some trade ideas to the short side and to the long side, which we'll take a look in the gold member next.